Well, guys, we knew that hedge fund traders and investors were most likely offside in this move. In today's video, you'll see exactly how much and why it could lead to even further gains throughout the year. Now that we've reached our 6100 call wall target, exactly how many options sit at this zone? In today's video, you may be surprised by all of this, along with the euphoria currently coming back into the markets and why IPOs are back in 2025. Did we just see the top though for one of the biggest and hottest ones? Circle dropped over 25%. Will it be a buy the dip scenario? We'll look at stocks, commodities, and cryptos. We're breaking it all down together and there's a lot to get into. Join us. We'll be back in just a moment. Well, welcome back everybody to The Daily Show. My name's Tom. In today's video, we're taking a look at that big data, the macro, the data, the key flows, and of course, what exactly has Wall Street been up to? Let's kick things off though with one of the biggest reads we've ever seen, and that comes back to calls. Every single person is in the options market now, and it looks like calls are starting to hit those all-time periods, which basically means leverage has come back in and euphoria. Now, you might have thought that might have dropped off in 2025, but because we're up, down, and all around, it's actually bringing even more investors and traders like you and I into these markets. And more importantly, it's got even more people starting to bet and gamble on some of these reads. Now, why have we rallied up? Well, one of the things is we're walking the wall of worry. So basically, one of the classics in stock markets is that we go up through the wall of worry, and then as everybody says, oh, everything's all fine, then we tend to drop. Well, in this case, of course, geopolitical tensions and all sorts of things have been taking over. But what you might not know is that hedge funds and global managers are super underweight the US at this stage. Now, they have been in the Eurozone, and that's been a pretty good performer. Emerging markets have done very well. And admittedly, a lot of other currencies have been where it's at. So it's not all bad for some of these hedge fund managers, but they are now the least exposed that they've been to the US market in over 52 weeks. And this is basically an underperformance. According to the latest data, we're seeing some hedge funds losing big time at the moment. 60% according to Bloomberg's latest report from Hedge, as they had a great year and now not so great in 2025. Just remember, a lot of these funds do underperform over the long term, and you've got to be on the wary when it comes to them being actually a lead indicator. As we've seen recently, retail traders have just bought the dip blindly and often been on the correct side of things, at least in the last couple of years. Let's now take a look at why a higher May and June, which we're about to close potentially higher in June, could lead to even bigger gains for the rest of the year. While we may see a sell-off somewhere in Q3, it tends to be 94% of the time that markets are bullish into the end of the year. And this goes along with a lot of the stats that we've seen from Zweig, Brett Thrust to every other one, the 70 and everything else that we saw only a few months ago. Everything points towards generally bullish action in these markets. And even against all of the geopolitical tensions, you might say, how are these rallying? Well, it takes a long time for markets to crack. And although there are problems out there, and we'll talk about those more throughout the year, we're just not quite seeing anything here that's worrying the corporate bond market. And that means that we may be going into Christmas in July. You guys know that during June, we tend to see either a pullback in time or a dip. And this year we've seen a pullback in time. We saw defensive markets not come through. So basically everyone was still buying semiconductors and tech throughout that kind of pullback in time. And that broke out over the last 24 hours. So at least from the statistical side, generally you'll see tech do pretty well in July. And 94% of the time since 2009, we've had a bullish month for the Qs, for the NASDAQ throughout that particular period. Now, there are some other things that are happening here in the markets. Everybody is now bearish dollar. And although we've all been bearish dollar all year, so that is January to now, I could make a case soon, if price action leads, that maybe the best move on the dollar is actually to the upside. Now, is that activated as of today's video? Absolutely not. We're still in a downward trend. But something similar happened in 2005, 2018, and of course, both of those led into rallies coming back into the dollar. So just because everybody thinks the dollar sucks right now doesn't mean it does. It just means that you've got to look for those price action things. We'll find out when some of the bigger AIs start to buy, and we'll see that because the footprints will be shown in the price itself. There are some bear charts as well. New York Stock Exchange versus Japanese yen. This one's been making the rounds, so I thought I'd bring it to your attention. I don't think it's the same thing, so I don't think this will work this time over. But basically what happened is during all of the previous kind of big drops in markets, we tended to see this particular ratio sell off first. Is it a good enough read? I don't think so in this case, but it's also the same type of thing as this one here, which is that if the US 2-year yield drops really quickly and the Fed panics, then obviously we're probably in a recession. Just remember though, again, although the gray marks are after these cuts, oftentimes this is not actually a sign of, an early read on a market going bad. We did see some stimulation in 2019, which I think was the only time that this made any sense after an inversion of yield curve. But yeah, I wouldn't say this is a good enough read statistically throughout time to say it's an early warning indicator. Remember, a lot of these drops have occurred throughout the period here, and generally speaking, they've happened because the Fed was reacting to problems in the jobs market or one of their other mandates. And yeah, it was already being sold off in terms of stocks themselves. Now, have we seen a point of inflection? So that is that everyone's too bullish, so therefore we need to be bearish. Yes and no. We've never seen, other than in 2000, so many aggressive sectors being overweight and obviously defensive sectors being nowhere. But do remember that if Wall Street goes defensive, then we're going to see it appear in these types of charts. And usually that will be during a topping pattern of the markets. Now that we're reaching all-time highs, you're actually looking for that. But we haven't seen it yet. And we will update you guys throughout the year if we do actually spot that one. It's one of my big reads, and I often do look for it. In terms of expirations, there are a couple of reasons why this market's been able to rally. The big one has just been so many puts suddenly entered into the system. Admittedly, there's tons of calls too. But the big strike here is 6,100. When you see later on the 0 DTE of the next session, 6,100 is a massive call wall, and everyone's buying calls all over it, which means that it's pretty much for day traders anyway, and even swings, a little bit of a target zone for taking profit. Now, as technology breaks out, that is not a bad thing. Remember, if technology leads or comes with the rally, especially semis at this point, then that means that the rally can be sustained. We've mentioned this for a while since we talked about swag breadth thrusts and everything else, and that has been where the market's doing well. Another thing that's happened is we've seen euphoria come back into the market. HIMs, IPOs, SPACs, all sorts of stuff. They're all coming back. And the last time we saw this was 2021. Now, it took a little while for the market to actually turn over there. It actually took 1 year. But do remember that when you start to see these types of things, you want to be paying attention. Now, HIMs did get a massive transaction over the last 24 hours. So I thought I'd bring it to your attention because when markets drop like this, often a lot of retail traders try to buy the dip. And that may work initially, but oftentimes they will end up selling off. And we saw the same thing here with Circle over the last 24 hours as well. Quite a lot of transactions coming through. No big one yet on the bottom end. I would expect that to come through maybe even over the next 24 hours. But yeah, certainly a big sell-off after what has been an epic rally here on IPOs. And it seems like as long as the markets stay like this, any IPO that's even, possibly growth seems to be, the place to be this year. And a lot of people are, of course, speculating on it. My opinion always is if you get the run on an IPO, fantastic, but never expect it to hold well because usually they go into the doldrums for 12 to 18 months, form a base, and then they start to come good. If you don't believe me, go have a look at Facebook, Twitter when it originally IPO'd. You can also look at things like Hood and so many other cases where they've done pretty poorly after going very well at the start. Year 3 is choppy, so I wouldn't really say I would have a super amount of FOMO. There are a lot of different opportunities, whether it's commodities, which we cover on this channel, whether it's dollar, whether it's anything else. And as I posted over on our X account, links in the description down below if you want to follow us there, that usually speaking, we go up, down, and all around. So I kind of expect us to rally, maybe make an all-time high, possibly drop a little bit in Q3, then maybe stay kind of stagnant this year. There is also a possibility that something bad happens at the end of this one, particularly around treasuries, which we will be updating if we do see that occur. S&P 500 chart time. So the big one here is got through the tweezer. Now, this is a very negative looking pattern. We talked about that on the weekend, but once you close and you move above it, it actually turns pretty positive. So that's why we were at what we call a neutral zone. We didn't see a break to the downside. We didn't really see a break to the upside until the last 24 hours. And when that occurred, it obviously created a very quick squeeze to 6,100. Now, we're almost at all-time highs here. We're pretty much at all-time highs for the NASDAQ. So the market is clearly bullish. There's no reason to say that this break is false at this stage. Maybe it could be, but no reason to say that. But I would say that 6,100 is going to be a bit for it to overcome, at least initially. So one of the drop levels that we're looking at is that maybe if it does drop back down a little bit, where are the bulls going to try to get back into this market? And it's going to be somewhere around, you'd have to think about 6,000 on the charts. Now, there are a couple of reasons for this. It comes back into a heavy traded area. It comes back to a fib, and pretty much it also tests these highs. But remember, when you see this type of thing, which is a pullback in time or a coiling market just before a new previous high, that usually means further highs are coming. So this is not the type of thing that I would generally say is bearish. And unless we see some kind of crack in the bonds market, or maybe Trump does something, or maybe even the Fed does something, it just doesn't seem like there are bears around at this stage. S&P 500, you can see here the 6,100 call. Now, just look at the volumes down here. That's a big one. 6,100 is a huge call wall. Big here, gets smaller in the next session on the 26th, but still a lot of options there. And then, of course, we move over here to the 30th, and you can see again 6,100. So if we do start to move through 6,100, we stick it with a daily close and a weekly close. You've got to think that the pain trade is still to the upside, which is what we kind of thought recently. And that seems to be going through quite a lot of stocks. Tesla didn't hold 350. If it did, then we can move towards 380, which is still kind of the plan if it does hold above 350. And at the moment, you'd have to think 320 is where the main buyers sit. So kind of in the middle of this area at the moment. 340 at the current time of this recording. Maybe it drops down to 320 again, finds buyers, moves through 350, gets 380. That could be one of the case scenarios. Nvidia, it's all about 145. We've broken that. So now you've got to think we're going towards 150. And once you get through 150, a lot of you guys want 175. I want to do a poll soon and see what your prices are. But yeah, Nvidia, if it gets through 150, that's a huge deal for markets. And it kind of signifies, again, just like a new move. Everyone's rallying. As we do know in year 3, the rally is unlikely to be absolutely stellar. Even with a May, June positive, the end of the year, we're probably looking at like, 5, 6, 7%. So, and that's probably a best case scenario at this point. There's going to be a lot of chop up, down, and all around. Put call ratio, as you guys see here, we got way too many puts on the 16th. And again, it acted as a wall, but we still have a ton of calls. I mean, we saw before, calls are out of control. You'd be surprised. Puts have really gained traction, especially since March, as people get very polarized in this world. And just remember, if you're going to use put call ratio, the key one up here, my read that I love, and we talk about this all the time, you hit a 1.38 kind of number, you want to be looking at that BTD, the buy the dip style stage, bringing together the evidence for that. And of course, if you sit too long in the 0.6, then you've got too much euphoria. That's when too many calls are sitting. And at the moment, we don't have either. We have tons of volume, tons of leverage, but we don't have an extreme yet. US 10-year dropped off. US 2-year dropped off. Basically, Jerome Powell kind of said he didn't want to cut rates, but a lot of the people on the board do. So the Federal Reserve's kind of admitted they're going to cut rates. And that led to those yields going down. And you can see here that the corporate bond world, very interesting. It's the corporate bonds we're looking at here. They're just still not seeing risks. And although I might disagree with this on a 1-2 year case, it doesn't really matter. The corporate bonds are not freaking out. The stock market cannot usually sell into that. So it's still the same thing. And we're constantly updating that whenever we get new data. What about the US dollar? Fell off the weekly here. You can see on the daily 20. Basically, a daily 20, again, rejection, good supply, decent trade there. This is super oversold. Everyone's selling. But for now, you've got to be looking at 96, 95, 50 as the target. And there is no reason to be bullish dollar yet. That changes, we'll update. And of course, that could be a big squeeze trade if it does change. What about gold? What's going on there? Well, as you guys know, the big thing here with gold is that it has been traditionally making a series of higher highs and higher lows the whole time. It came back and tested those higher lows, but it rallied. But it hasn't rallied enough. So not enough structure here on gold. A little bit better structure here. So that just remains still 34.05 to really get bullish movement back in. Medium, long-term players probably don't care. It still looks pretty good. And silver did the same thing. Made a new low, still not above 36.50. I'd love to see a 36.50 break. I think that would be kind of bullish for silver. And this is kind of what we needed, a pullback in time after that beautiful rally that we saw only, a few weeks ago. That was a big one there. And silver does this. It goes on an epic run, sits there, everyone thinks it sucks, and then it moves again. US oil, big moves here. It's pretty much played exactly the stats. So that was a rally, a drop, de-escalation, then escalation again, rallied up, actually hit 80 on the weekend oil futures, dumped super hard as everyone went bullish oil. Remember, if it's in the press, it's often in the price, and it was in the press, don't get me wrong. Everybody was talking about it. And then you have now an interesting point for oil. Do we see a buy yet? No. Do I think it's at a key level? Yes. So we're looking for structure. What about Tesla? Same thing, 320 on the bottom, 350 plus, ideally to 380. So really it's all about options, and Tesla has remained that way. Nvidia, 145 breakout. You can see here it's still squeezing higher. 150 next level. Next level after that is going to be somewhere around and possibly even 175. So 150 break will be huge. And semiconductors, as you can see here, semiconductors rallied through 260, 275 is the next target for them. And then if we get through that, then we're at all-time highs. And it could be big for semis. So it's still a bit touch and go, but really the only thing stopping this market at this stage is just so many calls sitting on 6,100. There's not many other things that are stopping it. Let's have a quick look at Circle, because this is the talk of the town. You can see here on the weekly, it looks huge. It actually rejected from the tops 27%. So this is pretty much where a lot of retail traders are trading, a couple of these IPOs. And this type of dip often is bought up. But I would caution against an IPO thinking it's glorious. They do tend to do this. Hood, Twitter, Facebook, Snow, doesn't really matter what it is. They all tend to do this. And they tend to have like pretty symptomatic kind of things like this near the end of their runs, which is a huge rally, a monstrous dump, a rally to buy the dip, as their retail all kind of know about this by now. And then often it turns over and it does the doldrums. So just remember, be careful here, guys, with Circle. And implied vol will mean that even with options, you are paying through the roof for the risks here. Let's now move over to the US 2K. You can see here the inverse head and shoulders. Obviously, it is going bullish, but it's still behind. And I'm still seeing mid-caps underperform. So if we look at VO versus SPY, what you're going to notice that mid-caps are still underperforming overall. If we go to something here like I think it's VO, just make sure it's VO there. Yeah, Vanguard mids. So if you have a look here, it's underperforming versus the S&P itself. If that starts to change and we start to see breakouts above the 0.47 ratio, it's going to be a sign that the Russell is ready to rock. But that has not been the case. It's been big caps, hyper growth. So that is massive innovation businesses, not the general mid caps yet. So Russell is good, but it's not really found that huge amount of inflows yet, according to at least our ratios. NASDAQ, all-time high pretty much reached, so big deal. Yeah. Is it at resistance? Sure. Is this still rallying? Yes. Did it break through the high? Yes. And it suggests there's more to come. A lot of it's just going to come back to that core wall on the S&P. And Ethereum and crypto in general are at interesting loggerheads. 2,500 is the key area for a bear to come back if they're going to push Ethereum. Remember, this is like a Wyckoff pattern that dropped through. So if they're going to be further sellers, they're going to come in around here. But Bitcoin, which is, of course, the better read, has been pretty resilient. And you can see here, it's dumped down and then rallied super hard, like a V-shaped rally. And if it gets through like a 108, I'm looking at it going in an all-time high. And of course, that target that I've had for a while, 125, would be pretty sweet to hit. What do you guys think, though, about Bitcoin? What is the price that you're looking at? And will it be able to get there? Now, this is not the type of trade I usually would do just yet. I'd usually wait for further confirmation. I am a big fan of reaction movements. If you were in the medium to longer term hodl or buying it and holding it, no real concerns. Of course, even in the worst case, we didn't really expect it past 95K. So really at this stage, it's all green, all good. And it does make up one of those three geopolitical kind of pillars. Silver, gold, Bitcoin this year have been some of our faves. In terms of next up, what's happening, we've got Jerome Powell coming out again on Wednesday. Then we have the core PCE and the GDPs. GDP shouldn't do anything. That's 8:30 New York time. Might move the market a little bit. bring some headlines, but whatever. And then core PCE price index is on Friday at 8:30 a.m. New York time. Guys, the big story here at the moment has been that the markets continue to push and squeeze higher. That seems to be where the pain trade is. 6,100 will matter. If you did target that, rightfully so. Very, very good zone. Well done to you. We're almost at all-time highs. When we see pits, pullbacks in time like this, we do tend to make them. And then, will we see another pullback? Yes, it is a likely thing to happen this year. But the question is when. And we do know that July tends to be called the Christmas period. It's Christmas in July, at least for the first half. And that's then when we start to get more weakness. So, hey, that's the data. For now, we're just looking at the price action and flows. And there's not really any reason at this stage to be like ultra bearish. And that really comes from the bonds market. The big thing here is going to be seeing the cracks. And they will come. And they are starting to appear. But they're not taking an effect on the bonds market. And I think that's a very important note to note. And we'll continue to follow that. Thanks so much for watching. We'll catch you in the next one. Bye for now.